Hello guys, as you know by now, my name is CryptoKeep, and today I want to discuss how to analyze price action with volume, the relationship between price and volume. So let's call it volume price analysis. Like I said in the candlestick analysis video, the price candles are visual representation of historic and past data. Each candle holds the price movement for that particular period. But in terms of volume do not contain the price movement, but rather the total amount of buys and sells that occurred at that given period. In other words, the total amount of contracts or coins bought and sold in that particular period of time. So what you see in the green volume bar represents a buy volume where it shows the willingness of buyers to buy, and the red volume shows the willingness of sellers to sell. So it is a sell volume. I hope you remember that for there to be a buyer, there must also be a seller. This means that for price to move from one point to another point, either higher or lower, is because there is a willing buyer willing to buy at that higher price in terms of positive price change, and then a willing seller willing to sell for a lower price being negotiated by the buyer in terms of a negative price change. I want you to understand that the market moves by demand and supply. As to this, let's take some quick examples. In a scenario where a woman has a warehouse full of fresh tomatoes and a lot of people are rushing to buy for the festive period, and if our initial price were to be $5 or just a bucket of the tomatoes, right? But seeing the demand, the huge demand coming in, she decided to take advantage of the price and then increases the price per bucket to $8. As she's selling now for $8 per bucket, demand are still coming in. Buyers are still rushing in to pick theirs, creating an even higher sales than the amount of sales she made when she was selling at $5. Because buyers think price has increased due to an impending scarcity. So they want to buy as soon as they can. But the woman, the seller, seeing this even higher demand, she decided again to increase her price from $8 to $12, which is now 50% increment on the last selling price of $8. Remember, price has gone up from $5 to from $5 to $8, then from $8 to $12, right? But as the price hit $12, only few buyers started coming to buy. The number of buyers buying reduced, as buyers are now saying that the price is too expensive and they can't buy at such a high price. So sales dropped drastically at this price level. What do you think has happened during this process of her increasing the price from $5 up to $12? What do you think has happened? And what do you think will happen when she realizes that buyers are no longer coming in the moment she increased the price up to that $12? Let's quickly take this diagram I've put up on the screen. Let's analyze it. So it started selling at $5, right? At 10 a.m. price was selling for $5, right? Then the way she saw demands were coming, she decided to increase the price to $8 by 12 p.m. So by 12 p.m. price increased to $8. So we are seeing an upward movement in price and time. Then after 2 hours, she realizes that demand was still coming in, buying at $8, way more than she sold at $5. Then she decided again to take another more advantage and make excess profits. Then increased her selling price to $12. That was by 2 p.m. Then she then realizes that the moment price hit $12, people were no longer coming to buy. What do you think will happen? Now, this I have shown here is just the price against time. So this is the movement we have seen so far up to $12. Now, let's examine what happened with the volume and price. Remember I said when she was selling at $5, let's assume that 300 people were buying at $5. So let's mark it as 300 people bought when she was selling at $5. Then she increased the price by 12 p.m. to $8. And then she witnessed an even higher sales, right? So let's assume 2,000 people came to buy when she was selling at $8. But then the moment she increased the price to $12, she started witnessing lower turnout. Lower people started coming. So let's assume 100 people came to buy at $12. Don't mind this, my rickety diagram. It's just an illustration to show the volume. Then, what do you think will happen the moment she realizes that the turnout at $12 is very low compared to the turnout at $8? Normally, she has artificially increased the price from the original selling price of $5 up to $8, now up to $12, right? So what do you think she will do? She will return the price back. She will reduce the price back to a price where there was very huge demand, or just a bit above it, which means she can reduce the price down to $9 or even $8 just to get sales back. Either way, she will still see how the people are turning out to that new price of either 8 or 9, and then see who are still buying again. Then she decided to reduce the price to $9, and the moment she did that, people started coming again. What does this show us? Now, going back to this price, she has then decided to reduce the price by 4 p.m. So within 2 p.m. to 4 p.m. she reduced the price to $9. Now, what can you tell? This is just price, right? And this is on the right side is price and volume. Now, looking at this on this price and volume, if you take a measurement from this top 300 people to 2,000 people, back to 100 people, then back to either maybe 800 or 1,000. I didn't mark that, sorry. What can you deduct from this analogy? This is just the price movement, the price action like we have here. So it may be this type, may be contained in this type of candles or the green one. It just shows that here from maybe 6 in the morning up to 2 p.m. the price was rising. Then at 2 p.m. it started dropping because volume was getting low, right? Now look at the volume here. This has to be 10 a.m. when the price was $5. Volume was 300. She increased the price to $8. Volume turned out to be 2,000, which means as she is increasing the price, the volume is also increasing. Then the moment she increased the price to $12, volume turned out to be very low, which is 100 people came forward to buy, which means there is lack of interest from buyers now. So low volume, when the price is rising like this, price rose from $8 to $12, but volume decreased from 2,000 to just 100, which then shows that there is lack of interest from the people. The buyers are no longer buying, they are no longer willing to buy. Then what did she do? She reduced her price because now there is something we call excess supply and low demand. Then she reduced the price to $9, which is an area where she has once seen a huge demand. And then the moment she reduced that price from $12 to $9, turn up started coming out again, which means buyers started picking up interest to buy again. So this is a wave movement. You see, we can see from here it went up, came down, which means from here to here the volume decreased. Then now it's starting to increase back. So as we can, if we are to compare this is price action, which is this, and this is volume, which is this. So price was going up, volume was also going up to this place. But the moment volume came up and rose, the moment price shoot up from $8 to $12, what do we see? We witnessed a reduction in volume, massive reduction. Then the moment price started to reduce, volume started to pick up. I hope you are getting the analogy here, right? So that is how the relationship between volumes and price can be. So what can we deduce from this drawing? Is that price that increased from 5 to 8, followed by an increase in volume of buyers, then price rose to $12, followed by a massive decrease in buyers. Then price went back to $9 and we saw another increase in buy volume. What I can tell you is this: when we are analyzing price action, volume is very important and it does two things: either to confirm the strength of the market or to confirm the weakness. Therefore, volume is to validate price or show an anomaly in price. This is an anomaly. Price increasing from 8 to 12 and volume reducing from whatever it may be to a lower number. We want to see this increment in price supported by an increase in volume. If we do not get that support in volume, then that means you have to be very, very, very careful. The take home from this is when price is increasing and volume is decreasing, there is likelihood of price reversal, as it shows buyers are now unwilling to buy at higher prices. Likewise, when price is reducing and volume is also reducing, there is likelihood of price reversal to the upside, as this shows sellers are now becoming unwilling to sell at lower prices. Let me give you another quick physical description in which we can use to analyze this. Let's assume, or let's imagine that we have a glass wall. Somebody is here on this side wanting to cross. Okay, assuming we have someone here wanted to cross from here to the other side, and you have a stone in hand. You have seen this is a glass wall, but you can pass through. But you see a stone and then you pick it, so you have a stone in hand with which you can break the glass. If you simply throw the stone at the glass, but it bounces back and nothing happens, what is this telling you? It simply means if you wish to break the glass, you have to put more effort, right? Then you have to get a bigger stone and put more energy, then hit the glass with force, and then if it cracks, you have a result, right? You are getting somewhere. But if you expected more than a crack, like you hit it with the stone in hand and you expect it to shatter, because a crack is a crack doesn't mean it has broken, but you expect to hit it and then you want it to break completely so it can give you way to pass, right? This simply means the wall is strong. Hence, you may even need much more effort to break it, or even a bigger stone, right? Then you get a much more bigger stone and then you hit the wall and the wall shatters. This means you have indeed added more effort to shatter the wall. Thereby you get your results in terms of trading volume and price. This means if there is a huge price movement, you want to expect that the underlying volume comes with a lot of effort, which means a lot of buy and sell. Assuming you come with all the force and then you still cannot break the wall refuses to crack even with all the force you can use, all the stones you can get, you keep hitting it, and the wall refuses to crack. This probably means the glass is so resistant and well proved, right? So what will you do in this case? You hopefully return home just to replan how you can come again to break the wall. So you return home to re-strategize. This is like a law of cause and effect, action and reaction, effort and results. All this will be familiar to the eye of a physicist, but in simple terms to understand the relationship of price and volume is why I am explaining it this way. So the effort you put to do something, if you are putting much effort to crack the glass, you are expecting the glass to crack. Unlike when you just pick a stone from the ground, you just throw it without any much ado, you just throw it like you're throwing a biro. You won't expect the wall to crack, right? So less high effort will give you lesser results, whereas much hard effort should give you hard results. But when you, like I said, when you go with all the efforts you can, all the might you can, and the wall refuses to break, probably bulletproofed or well-proofed or resistant, then you have to go back, get maybe some other people to hit it again. And like I said here, when you have volume reducing and price is increasing, then it is something you want to be cautious about. Let me try and make another example. Okay, let me give this last example in a layman's term. Assuming you have two students preparing to write an exam, a school exam. So you have two students, right? Mr. A and Mr. B. They are preparing to write an exam. Then Mr. A or student A attended all the classes and he is preparing very hard for the exams. And by this, it means he is even having sleepless nights. He doesn't sleep. He reads all through the night. He reads and reads and reads till he understands every page of his textbook and even make jokes out of what he has read in order not to forget. Because when you understand something, you want to easily be able to relate it to something. So anytime you remember that joke, you remember what the answer may be. This means he is putting a lot of effort into the studies, right? Just to make sure he passes the exam. Then Mr. B here, he doesn't attend class at all. He doesn't read. He's not even prepared for the exam. What will you expect of him in the exam? As you can see, he's not reading. He's not attending classes. He's not doing anything to show seriousness towards the examination. This means he is not putting in any effort to pass, right? So what will you naturally expect of these two students? You will believe that Mr. A or student A will pass easily, looking at all the effort he has put into reading and understanding everything about that course in order to pass. So you will expect that student A will pass easily, while student B will fail woefully, dignifying the effort to result. The amount of effort you put should determine the amount of result you get. But at the end of the day, if student A, with all the effort he has put in, ended up failing the papers, all his effort yielded zero results, won't you suspect a foul play? If a student has put in a lot of effort to read every page in his textbook just so he can pass, he has understood everything from A to Z. Ask him anything, he will give you the correct answer. Then he went into the examination only to come out and fail. Won't you suspect something at play? If the student were to be a lady, you would think the lecturer wants us for grade, right? And it definitely sounds fishy. Somebody who is an efiko, everybody knows that this guy is an efiko. Then he went for an examination only to fail. Then funnily, the second student, student B, who didn't even prepare at all, went into the same examination and then the guy passed all his papers. Won't you suspect him? Won't you be suspicious, right, of something? Another right to be suspicious is that to believe that something is strongly wrong. So that is an anomaly. We have many anomalies and we have many ways to validate price action using volume. Hard work should yield hard results and lazy work should yield lazy results. But it isn't so in this case. This means there is an anomaly, and how you can see all this anomaly in volume and price analysis is what we are going to talk about today. As you can see, all these examples, they are different in context, but very similar with the same similar result, right? Price of tomatoes increased to an amount with no further buyers. A glass wall that refused to shatter. Or let's assume you approach the glass wall. You are seeing the glass wall as a very thick glass wall. The way you are seeing it is very strong, a very strong one. Then you just touch it, you touch it, and then the glass shatters, like you have used some kind of magic. Won't you be suspicious of something? That this very thick glass wall, you just touched it and it shattered. Definitely you'll be suspicious of something like this is a trap, right? And then we have a lazy student who scaled all his paper without putting in any effort at all. All these are suspicious, right? They have something to be wary about. So all this scenario will only make you question that something is wrong, and then you take a reverse decision. Likely when there is heavy effort but no result, like student A, it will also reverse. It will make you to investigate what went wrong. For somebody to put in so much effort and then at the end of the day get no results, which is price reversal. So you going back to investigate what went wrong, what happened, how can this person fail? You going back to do all those investigation is the price reversing. Like when you also deployed all the power you can and the rocks you can get, yet the glass wall didn't crack. You have thrown all the stones, all even hammer, sledgehammer, jigger, everything you have used to hit the wall so hard, and the wall didn't even bug, no crack at all. You have to return back home, and then you replan, and as you are replanning, that is the reversal of price. Also, if the market woman didn't increase price at all, let's assume she was selling at $5 and 2,000, 3,000, 4,000 people, up to 10,000 people keeps coming to buy, and yet she's not increasing the price. And we all know how greedy sellers can be at times when they see heavy demand. Demand came and price of the meat remained at $5 nonetheless. It will make you studying the market, you that you are spectating the market to see how this buy and sell is going, to ask what's going on. A lot of people are coming. This woman is running out of tomatoes and then she's not increasing the price to at least make some advantage profit, right? Then this will make you ask yourself what's going on there. And then you want to go and find out, probably there is a governmental cap on the price. And the government has said the price of so should not be more than so. So no matter the demand that comes into the market, they will have to sell at that same amount. If not so, the price will increase, right? So you going back to do those findings is like the price reversing. Now let's get to the technical part of this. But remember one thing, I am trying to put all this information out here just to the benefit of people to understand how simple trading can be, in as much as we have something we can relate it to in our daily lives. Like I am relating it to somebody selling tomatoes, somebody trying to break a glass wall, somebody studying for an examination, which is all correlated when we are talking about price and volume. The volume is the effort you are putting in, while the price is the result you are getting. If you put a very huge amount of money into a market and you expect it to yield results by growing, but then nothing happens, that means something is wrong somewhere. But then if you have finally put a $1 into something and then the price has skyrocketed, then you will also suspect that, oh, what's wrong? $1 can move this thing. So those actions call for suspicion, which is why I'm trying to get my lessons as simple as I can, so we can always relate it to something physical. And this are what we do on a daily basis for real. Many people will never put such simple analogy out here for free, but I'm doing so we can build a community of traders who are ready to help each other and we can grow together. This is me giving back to the community with the knowledge I have researched and accumulated for over years. But then here we are showing you how simple trading can be, and not just how simple it can be, but how you can profit from trading. And we are talking about real profit. So let's get technical here. Let's look at this chart. On this chart, we see that this price has moved from this point up to this point, just for the single candle, from this low to this side, right? It has moved from this low to this side. That means there is a positive price change. And when we look at the volume behind this, if this is the effort, this is the result. Now, we want to look at this particular candle, the body, not the wicks. The body is okay. Then we want to see the underlying volume. If the bar is also okay, like almost the same with the candle body. But as we can see, this is a moving average, right? The green line is a moving average of the volume. And for this bar to be above it means it's above average. The volume is above average, which means a lot of buys happened at this particular volume. Then did we see a lot of movements in price to the upside? It has changed from year to year, which is decent enough. With just one candle, what do we want to see? We want to see if a candle is big like this, assuming this is the movement between the open and close of a bullish candle. What do we want to see on the volume bar? We also want to see a volume which is equally as huge as this. But assuming we have a price change which has moved from this point up to this point, and then we look at the underlying volume, and what we see is something like this. Remember what I said in those my past examples, that we have little effort, like the student who didn't read and then is hiding all the results. You want to suspect that something is going on, right? But here you have put in an effort and you have seen an equal amount of results, so everything is okay. But here everything is not okay. It is suspicious. Another thing suspicious that we want to look out for is when we have a volume, a big volume like this, then we have a candle like this, a small candle. Isn't this suspicious as well? You have put a lot of effort, like the student A, who did everything he could to pass, but at the end of the day, he failed. So here we have a lot of money coming into the market, but then the price is not even moving, like nothing is happening. Here we have little money coming into the market, and the price is moving like we have millions coming into the market, which is not so. And here, like we have decent amount of money coming into the market, and we have a decent amount of reaction. So here, everything is okay. But on these two, we have an anomaly. So here, volume has validated the price to be okay. But here, on these two occasions, volume has shown that there is something to be worried about. So let's see if we can identify this kind of things. We have to do it on a single by single basis, single candle. Then we can also combine multiple candles to see what is going on. And remember, like I said, once price is increasing, like if we have price increasing like this, we have here to here, then we have it here to here, we have it here to here. What do we want to see about the volume? We also want to see volumes coming up like this, right? We want to see volume coming up like this, also increasing. So we see an increase in price, and also we see an increase in volume, just like we were seeing here when the price was increasing from $5 to $8, was also increasing like here, but the volume was increasing. But then the moment the volume started decreasing and price is increasing, that is divergence in price and volume. So let's look at this whole picture. Look at this picture from this low to this side. What was happening is that price were increasing, right? Then let's look at the underlying volume. That is from this point. We also see that price was increasing. If we choose to silence these long volumes, you can see that this section here, the price is above this section here. So it's increasing. Also, looking at the moving average of the volume, you can see from here to here it was increasing. Then we have a pullback here. Then what happened? Another price rally, right? Up to this side. But when the price was moving from this side to this side, what did you notice? On the volume, you see that the volume is reducing. That means interest is lacking. And then what happened? The moment we saw a lack of interest or reduction in volume, we saw the market coming back down. So let's start with the single candle analysis. So like this candle here, this very candle here, this very bar, it is way above average, right? But look at the let me make it a big board. We have this very huge volume, right? It is bigger than the rest we can see on this screen right now. That is the top. But look at this, the size of the body. Look at this huge volume. Look at this small body. This is like the guy putting all the effort he can to read just to pass his examination, and at the end, he failed. Here, we have a lot of money coming into this market, and here, the price is not reflecting the amount of money coming into this market. That is your number one cause for worry. When you see an huge amount of volume like this, and then you look at the price candle, and it is as tiny as this compared to the volume, that is the number one signal you want to see that something is wrong. Then going on to the next candle, because you cannot just base your decision on one candle. So you go to the next candle, you see the candle is very small. So looking at the body, forget the wicks for now. Just look at the body from here to here. Very small. Then this sell volume is also huge, even above average. We expect a decent pullback, probably from like this. We expect something to be as big as that, right? But then we are not getting it. So what could be the problem? That is also confirming that there is an anomaly, right? We have a lot of sales, but the candle is not showing the effort being put in. Does it mean that buyers are absorbing the sales? Then we proceed to the another candle, the third candle. Now we have another small body, a demand candle, right? Then we even have a smaller volume bar than this very one. But look, and if you notice one thing, watch this red and green bar very closely. You can see that the volume on this volume is lower than this, right? But when you compare the two candles, when you compare their body size, you can see that the green candle is bigger, it's even an engulf. That shows that there is a problem somewhere again. You have little effort, you have big results. Whereas the effort you have even put in is lower than the effort put into this one. So that is signaling that there is problem. And if you watch from this very point to this point, the price increased. Here to here, price has increased, right? Even look at the close here and the close here, price has increased. But looking at the volume from this very volume to this, the volume has decreased. That is showing a price divergence, which means there is an impending reversal in price. Then if you see a downtrend like this, you also want to see an increasing volume. If the market were falling like this and the sell volumes were to be increasing like this, that means the amount of sell is very strong and sellers are willing to sell even way lower. But the moment you see a falling price like this and volume is still falling as well, and volume is falling, then it shows that the sellers are getting worn out. They are relaxing. They are no longer selling with force again. Are you getting the point? Now look at this. Look at this particular. See here, we have this price increase, and we have a falling volume. Even the moving average is also confirming a falling volume, right? We have some spikes above. But when we look at these spikes in volume and we look at the candlesticks tied to that, we see that it's nowhere to write home about. The effort is way more than the result yielded. So this is showing us that there is something wrong. This doesn't mean that you cannot go long in this market. If you're already long, this is the time to start looking for a point to sell. You may not be able to sell with just using volume, because at times you then have a volume start to increase due to some outside something, news or something. But you want to pay attention to the volume to know what is going on. Look at this. I just spotted this one. Look at this from here. This very and up to here. What do we see? We see an increase in sell volume, right? It's 1, 2, 3. Then look at this candle here. Let me try and maximize it. Okay. This is it. When we look at this volume, it is small, right? Even below average. We look at the candlesticks tied to that. It is also small. That means everything is okay. Now, the next candle, we have an increase, an above average candle. What do we have here? We also have an increase in the body of the candlestick compared to this. This body is bigger than this. So everything looks okay. Then here, we even have a way bigger candle, way bigger volume. And what did we see here? We saw another way bigger body of the candle. So as this is increasing, this is also increasing. That shows that everything is perfect. And when this came, we have another above average buy volume, but the body was very small. This could mean one thing. When you have an increase in sell volume and prices dumping very hard, then you see a big volume of buy but a small candle. This could mean sellers are getting absorbed because now they are no longer selling as much as they sold earlier on, and the small amount the buyers are putting into the market is holding the price. And what did we see next? We saw an even higher volume, which means buyers now are putting in double effort on the previous volume. Now, we have a bigger volume coming into the market from the buyers, and we have the big candles. Now, if you notice one thing, if you look at the wick at this point, the wick is very huge, right? To the downside. This means sellers were selling up to this point, and the bulls accumulated everything. And the top wick, you also see that sellers still sold, but the bulls were able to resist and still push the price back up. This shows that buyers are taking over. We saw double increment, and also the price also validates it. We have an angle here. This candle is bigger than this, if not times 2 of it, and then we have a bigger volume than this. So this movement is correct. So we might anticipate that price is about going back to the upside, which it did. I don't know if I can get some more examples. I'm looking for a big candle with a small volume. Okay, we have one here. See, we have this large effort here, this big above average buy volume. But what do they get on the candlestick? A very tiny body, right? A very tiny body. This is it. A very tiny body. Then look at the candle that followed it. You see, the price has been increasing on this very bar 2, 3. And the price has increased 1, 2, 3. Now, look at one thing very important, something I just spotted right now. Look at this bar. Look at this volume. Everything seems okay, right? Look at this bar. It's like double of this. Then we have an even bigger candle, right? Then look at this third candle. The body is very small. This candle here. The body is very small for the green one. But look at the volume. The volume is very big, bigger than the volume that caused this whole movement. And then the body is just nowhere to write home about of this very body. For this volume to be like doubled of this volume, we want this price action to be doubled of this, which means I would have expected price to run like from here up to here like this with this volume in place. But we didn't get that. That is then showing us that the effort being put into this market is no longer yielding a result. Like there is a hard war somewhere around there that price is not breaking, or sellers are absorbing all the buys. Because if this volume here is way bigger than this volume that caused this reaction, but then this whole volume can only get us this very small body. That means something is happening, right? Smart money are doing something. If not smart money, then big traders. They are accumulating here. Or I'm sorry, distributing. They are accumulating, or they are absorbing all the buy orders. They are selling. Then we have this candle here. If you notice, this candle is bigger than this candle, right? The body. Then we even have a lower effort causing this body to be like that, which means little amount is being sold so that people can buy. Little amount is being sold, causing the price to drop and be bigger than this, so that people can still buy back, or so that people can sell. Then when we have this candle, it came up with a big volume, but the volume is not even close to this with this low reaction, which means this, if this is correct, then this candle should be even as small as this. But then we have a big result from a lower effort than the previous one. Then when we look at the next one again, we have a small body with almost the same effort. This bar and this bar is almost the same. So we could have expected something, this candle, to be close to this. But then we also have an anomaly here. And apart from the anomaly, you see from here, the volume is reducing. And as the volume is reducing, that means people are no longer interested in buying higher. And then we saw the price reversing. I hope you understand. Because of time, I cannot explain fully where like I would have loved to, but I hope you still get the idea behind it. It is the idea that matters. So, and what we are trying to say in this is that when you have a price increase like this, and then you spot the volume, either using the MA or the volume bars themselves, to be decreasing, that means this market is approaching its peak. Then you want to find a point you can either sell above. But when the market is increasing like this is increasing here, and then if the volume were to be increasing as well, then everything is good. And that time you want to be watching the candles for any anomalies. Like you have this big candle here, this buy here, this big buy here is bigger than every other candle here. So you expect it to be a lot bigger than all the candles you've seen before. But then it's not like that. That is your first sign that something is going wrong and the market is probably peaking. Then you want to start seeing the next candles and the volume that followed to start comparing to be sure if the market has truly reached its peak or the market is just wanting to play smart on you. So that is it. And if you get like here, you will see, we can see from here, the price was reducing. Then what was the volume doing? That is from here. We can see the volume was also reducing, right? The price was reducing, the volume was reducing until here. And when price is reducing and volume is reducing, that means sellers are also losing steam. But when price is reducing and volume is increasing, then sellers are still very much in the game. And then you want to be careful of taking a long until you start seeing anomalies in volume and candles to ascertain that yes, the market is bottoming out. So that is it about volume and price analysis. I couldn't have said everything I wish to say, definitely, but the video is already long and I do not want to bore you too much. So if you have any question at all, you can always ask, and then we can always discuss it in the Telegram group. I'm always at your service, you know. So let's end this there. Thank you for watching, guys.